If you own Bitcoin, USDC, or other crypto assets, and you're thinking about buying a home in Chandler, Arizona, there's a big shift you need to know about. For a long time, crypto and mortgage lending felt like two very separate worlds. You might have had money in crypto, but when it came time to buy the house, most lenders wanted to see traditional income, traditional bank statements, and traditional cash reserves. That is starting to change. Recent mortgage industry news shows that crypto-backed lending is moving closer to the mainstream, with Fannie Mae, Freddie Mac, Coinbase, and Better Home and Finance all becoming part of the conversation around crypto and home financing. So today, I'm going to explain what this could mean if you're trying to buy a home in Chandler, Arizona. Not hype, not crypto bro stuff, just what you need to understand before you try to use digital assets as part of your home buying plan. I'm Nancy Wittenberg with Coldwell Banker Realty in Chandler, Arizona, helping buyers understand their financing options in the East Valley. Now, all of this matters because Chandler has a lot of financially savvy buyers. We have tech professionals, engineers, entrepreneurs, remote workers, investors, and people relocating here from California, Washington, and Colorado, and other higher cost markets. A lot of these buyers don't hold all their wealth in basic checking accounts. Some have stock options, some have RSUs, some have crypto, and now the question is becoming more common. Can I use that crypto to help me buy a house in Chandler? The simple answer is yes, but possibly. It all depends on how the crypto is held, how the loan is structured, and whether the lender can document it properly. So let's break it down. The big change is that cryptocurrency is starting to be treated less like a fringe asset and more like something mortgage lenders may be able to evaluate. According to the National Association of Realtors Tech and Innovation article, the Federal Housing Finance Agency, which is directed by Fannie Mae and Freddie Mac, was told to move towards crypto-backed mortgage options, where borrowers may be able to use assets like Bitcoin or USDC as collateral instead of being forced to sell them first. And that's a big deal because in the past, you had a lot of your wealth in crypto. You might have been told to sell it, transfer it to cash, document the funds, and then we'll talk. And selling crypto can create other issues. You may trigger taxes. You may lose future upside. You may not want to liquidate an asset just to prove you're financially strong. The new model being discussed allows certain crypto assets to support the home financing process without automatically requiring the borrower to cash out everything. Now, this is not wide open for every coin, every wallet, and every buyer. The article specifically points out that the focus is on crypto held by U.S. regulated centralized exchanges such as Coinbase, Kraken, and Gemini, because lenders need documentation, compliance, and reporting. So if your crypto is sitting in a cold wallet, DeFi protocol, or some hard-to-verify account, that may be a very difficult conversation to have with a lender. Mortgage lending still runs on documentation. That part has not changed. For Chandler buyers, this could matter in a few common situations. Let's say you're buying a home in Pocatello, Bolton Ranch, Cooper Commons, Sungrooves, or near downtown Chandler. You have solid income. You've got good credit, but a meaningful part of your wealth is in Bitcoin or USDC. Before, you may have looked weaker on paper than you really were because your assets didn't fit neatly into the traditional mortgage boxes. This change could give some buyers more flexibility, and it may help with reserves. It may help show financial strength. It may help allow a buyer to avoid selling crypto just to meet certain lending requirements. But there's a catch. Crypto assets are volatile, so lenders are not likely to treat $100,000 in crypto the same as $100,000 in cash sitting in a bank account. The National Association of Realtors, NAR, article states that underwriters may apply what's called a volatility haircut, meaning they may only count a portion of the crypto value toward the buyer's financial profile. The article gives an example of 50 to 60% of crypto holdings potentially being counted. depending on the controls and underwriting standards. So don't just assume that because your wallet says one number, the lender will use that full number. They probably never will. And honestly, that's reasonable. If crypto can swing hard in a short period of time, the lender has to account for that risk. This is where buyers need to be careful. Crypto may help your file. It doesn't erase the basics. You still need to qualify for the mortgage. That means lenders are still going to look at things like your credit score, your income, your debt-to-income ratio, your employment and business history, your reserves, your overall risk profile. The NAR article makes this point very clearly. Crypto holdings is not a guarantee that someone qualifies for a home loan. Credit, income, and debt-to-income ratio still matter just as much as before. So if you're buying in Chandler and you're thinking, great, I've got crypto, so I'm good, slow down. Crypto is one part of the picture, not the whole picture. The lender still needs to see you can repay the loan. That's the part people sometimes miss. You may have impressive digital assets, but if your income is hard to document, or if your debts are high, or your credit needs work, you may still have hurdles. Here's a realistic example. Let's say a buyer is relocating to Chandler for a tech job near the price corridor. They're looking at homes between, say, $600,000 and $850,000. They'll be looking in areas like Ocotillo, Fulton Ranch, and parts of southern Chandler. They have strong income and good credit, but a lot of their savings is tied up in Bitcoin and USDC. They don't want to sell because they believe the long-term value of those assets. In the past, the buyer may have had to liquidate part of the crypto to strengthen the loan file or cover down payment needs. With the newer crypto-based structures, that buyer may have another option to discuss with the lender, but they still need a clean documentation trail. They would need transaction history. They would need to show where the assets were held. They would need to understand the loan terms, the risks, and what happens if payments are missed. This is not something you just figure out in a day, the day before writing an offer. You want to talk to the lender early, preferably before you start touring homes. If you're in Chandler and you want to use crypto as part of your home buying plan, here are a few steps I'd take before you get serious. First, get organized. Pull everything together, your crypto account, your statements, transaction history, and recordings showing cost basis if available. Second, know where your crypto is held. Assets held in regulated centralized exchanges may be easier for lenders to review than assets held in cold storage or decentralized platforms. Third, talk with a lender who understands non-traditional assets. Not every lender is going to be comfortable with this yet. Some will be ahead of the curve and some won't be. Now, fourth, speak with a tax professional. If you sell crypto, borrow against it, or pledge crypto as collateral, there could be tax and financial planning consequences. I'm not giving you tax advice here. Don't say that. You need somebody qualified looking at your specific situation. And fifth, don't wait until you're under contract. In Chandler, good home can still move very quickly, especially if they're priced well and located near strong schools, employment corridors, shopping, and freeway access. You don't want your financing questions slowing you down after you've already found the house. This matters for sellers too. If buyers can qualify by using a broader range of documented assets, that can widen the buyer pool. That doesn't mean every crypto holder is suddenly buying a home tomorrow, but it does mean real estate professionals in Chandler need to understand how modern buyers think about money. Some buyers are not just sitting on a ton of cash in a savings account. They may have crypto, brokerage account, equity compensation, business income, or other assets. A seller who wants maximum exposure needs an agent who understands how buyer financing is changing, because sometimes the strongest buyer on paper is not always the strong buyer in real life. So, can you use crypto to buy a home in Chandler, Arizona? The answer is possibly, but it depends on the lender, the asset, the documentation, the loan structure, and your full financial picture. If you're thinking about buying in Chandler, say in Ocotillo or Fulton Ranch, downtown Chandler, Sun Lakes, Gilbert, or anywhere in the Southeast Valley, the smartest move is to talk with you through this part before making an offer. I'm Nancy Wittenberg with Coldwell Banker Realty, your dedicated home advocate. I help buyers understand their options before they move. So reach out if you want to review what buying could look like for you.